Hey traders, Steven here, and the trade you see on the screen is a trade I placed during the Asian session. Now, this trade went on to make me around $2,100 overnight, but it's not always been that way. Towards the beginning of my trading career, I didn't even think it was possible to day trade during the Asian session, but throughout my 10 years of trading, I have developed some tricks and hacks that allow me to place trades just like this one on the New Zealand dollar on a very regular basis. So throughout this video, I'm gonna be sharing with you my top 3 tricks and hacks that allow me to place trades like this during the Asian session, where 90% of them develop within a 24-hour period. And I'll also be sharing with you the strategy I used in order to enter this trade here on the New Zealand dollar. So if that sounds good, then go ahead and click that like button for me. Go ahead and subscribe if you are new, and I'll see you after the intro and disclaimer. Welcome back, and we're going to start off with the 3 hacks first, then I'll get into the strategy itself. So firstly, the reason day trading during the Asian session is hard is because the Asian session has very little volatility, meaning very little price movement. So if you're trying to day trade and you're trying to get in and out of the market within 1 hour, 2 hours, or just a few hours, it's going to be really hard for you to do that during the Asian session. But we can get around that with hack number 1. So I can't even count the amount of times I've had comments here on YouTube or been asked by students, how can I incorporate the Asian session into my trading? The reason for this is because a lot of you, including myself when I started, may have full-time jobs or may have other obligations, and this Asian session may be the only session you can actually be in front of your computer. And what I want to do right now is give you the first hack of being able to do that. And that is to disregard the belief that a day trade has to happen within a couple of hours. In reality, a day trade is anything that you open and the trade closes within a 24-hour period. And there is a way we can make that happen even if we place the trade during the Asian session. Hack number 1 is going to be to do your regular analysis. Trade your regular strategy, whatever that is, but do it during the Asian session and on a time frame of the 1 hour, 15 minute, or 5 minute. Now, the reason I say that's not just because this is specifically a day trading strategy, but during the Asian session, if you try to trade anything higher than the 1 hour, chances are you're not going to hit your targets or stop loss within a 24-hour period. But if you keep to those lower time frames, when you're doing your analysis during the Asian session, almost said alien session, Jesus. During the Asian session, if you keep to those lower time frames, what happens is directly after the Asian session comes the London session and the New York session. These 2 sessions have a massive amount of trading volume most of the time. So most of the time, if you open your trade on a smaller time frame, then your target or stop loss will be hit within a 24-hour period and during the London or New York session. So to give you an example of this, all you would need to do is like we did here on the New Zealand dollar. I was checking the 1 hour chart. It was during the Asian session. I saw a double top develop, and I told myself, okay, well, this double top is developing. I know it's the Asian session, but if I get into this trade during the Asian session, chances are that prices will hit either my stop or target within a 24-hour period. So hack number 1 is to do your analysis, place trades using your strategy on lower time frames during the Asian session, and let the London and New York session come through to help your trade play out, whether that be to hit your stop loss or to hit your target. Hack number 2 is understanding limit and stop orders for your entry. So right now we have our double top developing here on the 1 hour chart. Let's say that you did not want to enter right now. You wanted more confirmation. You wanted price to go lower before you entered the trade, but you knew if price does go lower, you want to be in. If that's the case, then you need to understand an order called a sell stop order. Now, a sell stop order gets you into a trade below current price if price goes down and hits your order. So what you would be telling your broker, if you hit a sell stop order and you had it right at 0.6299, which is where our precision tool is, what you would be telling your broker is, I don't want to be in the trade yet. And if price goes up, I don't want to be in the trade. We've pushed above our double top. Obviously, that's new highs. That's trend continuation. I don't like that. What I do want to do is get involved in the trade if prices push lower and get a little more momentum to the downside after this double top. So what your broker will do is it will not place the trade right here. Remember, this is a sell stop order. It will not place the trade right here. It will wait until prices get to this area before it actually puts you into a trade. Now, obviously, you could also say, I don't want to get involved until here. You could put a sell stop below the neckline of the double top. These types of orders are very useful when it comes to trying to trade during the overnight hours, because if you're on the East Coast of the United States, like I am, you're probably going to sleep during the Asian session. So with that being the case, you can just set sell stop and buy stop orders. By the way, a buy stop is just the opposite of this. We'll go over that in a second, but you can set a stop order to get you involved in price, to get you involved in the market when price comes down and breaks this neckline. If you know that's when you want to get in, if you have a strategy that the rules are, I trade the break of a neckline of a double top, this can get you into that trade without you having to be awake, without you having to be around the computer. So obviously super useful for trading during a session where you may be asleep. Next up, we have limit orders. So let's move price forward a little bit. That was a sell stop order. We're going to talk about sell limit orders. Let's say you see this happen. You see price come down, break below, and close below the neckline of our double top. And you say, well, man, right now I don't want to enter because price is too low. I don't feel like I'm getting a great entry. My stop loss has to be huge. But if price pulls back to the neckline of the double top, that's when I'm thinking I can actually get a decent reward to risk ratio on this double top trade. So if this was the case, what you would do is place a sell limit order. A sell limit order is you telling your broker, get me involved if price pushes up to this exact point. Whatever the point is that you have your sell limit order set to is where the broker will enter you into the market if price pushes up. Now, if price continues lower, you couldn't get a good enough reward to risk ratio, so you don't even want to be in this right now. And if price continues lower, you have nothing to worry about. You won't be entered into the trade. But if price pulls back, you can get entered into the trade and have a better reward to risk ratio by utilizing that sell limit order. Now, I said I was going to go over this, but hopefully this is an easy concept to understand. In terms of buy trades, it would be the exact opposite. So for a buy limit order, let's just set one up. Let's say prices were up here, this green candle, and let's say that prices started to pull back. You would do something like set a limit order right here if you wanted to trade the neckline of this double bottom. That would be a limit order. And if prices were before this green candle, let's say, I can actually go ahead and use the replay tool. Prices are right here, and you're saying, well, if we break the neckline of this double bottom, I want to be involved. This would be a buy stop order. You're telling your broker you want to get involved if prices head higher, but you don't want any part of it if we continue down. So those types of orders are the second hack to how I take advantage of trades during the Asian session, because these two orders, the buy stop, sell stop, and the buy limit, sell limit orders are extremely useful for overnight trading. Hack number 3 is not one that I always use, but it is something that I love to see align with everything else, and that is using news events to your favor. So this morning we had retail sales for the United States. I assumed that that would push the market around a pretty dramatic way here on the New Zealand dollar. So with that being the case, on a normal trade, I would have had a 1.4 to 1 fixed reward to risk ratio on this exact trade. And I would have just had that order in place. It would have hit it overnight. I would have made money. But I deleted my target because I knew there was a news event coming out that could possibly push prices much lower and possibly get me into much bigger profits. And that's exactly what happened. So when I can align a news event that's going to bring extra volatility into the market with the other hacks that I've just taught you, that's always a huge plus when it comes to trying to find a great reward to risk ratio on a trade. This one specifically, we hit a 3.3 to 1 reward to risk. Now, let's take a look at a short clip of this trade live, and then I'll come back and explain the entire strategy I used to get involved here on the New Zealand dollar during the Asian session. Here we are on the New Zealand dollar, where I placed a trade using the Asian session strategy you're learning in this video. As you can see, this position has already been placed. We're up right now around $1,348. And as you can also see, we are on a live account. I'll keep you guys updated on how this trade plays out. So as you've already seen, this trade did in fact push down. We ended up getting about a 3.3 to 1 reward to risk ratio out of this trade, exiting it on Friday. Now, the exact strategy I used was very simple. It was a combination of this double top we see and RSI divergence. Now, for those of you who are not familiar, RSI divergence is when the RSI indicator is creating lower highs while price continues to create higher highs. That's known as divergence, and it can be a good sign of a possible reversal, which is what we utilized here. Now, along with that, we had this double top that had formed. Now, this double top, just to give you my rules on double tops really quickly, I have our first top right here. And for my rules of a double top, I need to see that the second top comes into what I call a termination zone. That's this red area. And the termination zone exists between the body and the high of the first swing high of the first top. So with that being the case, we have prices coming into this termination zone. I cannot see candles close above it because that signals trend continuation for me. And I do have to see candles at least touch it. Like a wick of a candle has to at least touch this zone. So when I actually saw this trade, the timing was around 11 p.m. So I'll show you what that looked like with market replay. So this is what I was seeing. And I utilized everything you've learned in this video in order to place this trade here on the New Zealand dollar. What type of order did I need to place? So let me go ahead and walk you through it. I have the double top, but I don't have any confirmation as of right now. When I'm seeing this chart, I don't see a lot of selling pressure. I know I need more confirmation. More confirmation for me would be any candle that pushed down in a dramatic way. So with that being the case, I wanted to place an order right here. What order would that be? Hopefully you said a sell stop order, because that's exactly what I placed, was a sell stop order. And by the time I woke up, price had not only hit that order, but price had fallen dramatically because of the news event, the retail sales that came out on Friday. So this trade also utilized the news event coming out, me knowing that would add extra volatility. I would not go out and just trade every double top with RSI divergence, because that is likely not going to give you a big edge over the market. But specifically for this trade, I did want to trade that because I knew retail sales was coming out and I wanted to get involved in the market so I could capture some profits from all that extra volatility. And that's exactly what we did. So if that was helpful to you and you're ready to take your trading education a bit further and learn some of the other strategies and techniques that I personally use in my trading, then we have some space available right now in the TTC Forex University. If you want to go find all the details about the university, just click the first link in the description or go to www.ttcfxuniversity.com. If that's not something you're interested in, then that's completely fine too. Just make sure you click that like button if you made it to the end. Make sure to comment below. Make sure to subscribe if you are new. And I'll catch you in the next video.